Good day, traders. It's Letum Tembu speaking, the founder and mentor at Blue Million Forex. And in today's video, we are going to be speaking about the five basic concepts or the key concepts of a successful beginner or an intermediate trader, right? If you're new to the channel, this is our first ever video. I'll make this a five-part series just to make it in shorter format so that people can go to the specific video whenever they want a specific concept. Now, the concept we will be speaking about in this video is one that I really like. It's the stepping stone. It's the start of everybody's journey, and that's understanding the basics of forex trading. Now, in this video, we'll speak about the concepts of forex trading, which are buying and selling currencies in the foreign exchange market. I'll explain the key terms such as currency pairs, base currency, and quote currency. And I'll explain the significance of exchange rates and how they determine the value of different currencies. Now, at its core, right, forex trading encapsulates the art of buying and selling currencies within the exchange market. So whenever you hear the word forex, right, I want you to imagine people buying and selling. So I'll just show you. So there's a person who will be buying and there are people who will be selling. So that's how I want you to imagine the forex market, as a marketplace where people are buying and selling currencies, right? So this market is often referred to as the forex market or the FX market. So whenever you see it written as the FX market, it also means it's the forex market. It's just forex in short. Now, this is a global arena where nations, institutions, and individuals like me and you in the trade of different currencies. So forex is basically a marketplace where buyers and sellers meet and they exchange currencies. Now I want you to imagine the forex market as a bustling marketplace where currencies are exchanged, which are influenced by a multitude of factors that span economies, politics, and global events. You understand? So to embark on this journey, we'll first need to understand the language which is spoken within the realm of forex trading. Now, when we speak about the language of forex trading, I want you to come on this trading terminal. Now, whenever you hear the word a currency pair, now as you can see, we're on the chart of GBP USD. Now, if you look closely, right, GBP USD is what we call a currency pair. So I'll just write it here, right? So it's written GBP, right? GBP USD. Don't mind my drawing, guys. I know it's a bit crusty. So GBP USD is what we call a currency pair, right? So this is a pair because there's two currencies, which makes it a pair, like a pair of shoes. You understand? Just trying to make it simple for you. Now, what you see on the left right here is what we call a base currency. Now, a base currency is the currency which you should be focused on, right? On the left-hand side, we have what we call let me just change the colors. So on the left-hand side, we have what we call a quote currency. Now, in GBP USD, so whenever a person like me and you, we enter into the market and we say, okay, I'm going to be buying GBP USD. It means that you are predicting that the pound, which is the base currency, right, which is the base currency, will be going up, right? So let me just type it instead of doing it like that. So this is what we call our base currency. Okay, and I'm gonna put it here. Let me just remove this. Okay, sorry guys for that. I was just removing the things that I typed. So GBP is our base currency. So whenever you say buy on GBP USD, it means that you are predicting that the pound or the currency pair will rise in value. Vice versa. Whenever you sell, right? Let me just put this on. Whenever you sell, it means that you are predicting that GBP USD, or specifically the base currency, will fall in value, right? Now, the base currency is the one you are buying or selling, while the quote currency is the one that you are exchanging, right? So this dynamic duo forms the basis of every trade from every popular currency pair like Euro USD to the most exotic one like AUD USD. Now, as we delve deeper, we encounter the heartbeat of forex trading, right? Which is an exchange rate. Now, these rates are depicted as numerical values. They showcase the value of one currency in relation to another, right? Think of exchange rates as an intrinsic choreographer between currencies on the global stage. They are influenced by an array of factors like interest rates, inflation, or economic performance and geopolitical events. Now, on the right-hand side, if you can see just right here, right? Just right here. This is what we call an exchange rate, right? So these are the rates which tell you, right? For example, if we look at the USD ZAR, right? This tells you that for $1, you need 18 Rand. So they just basically mean that. So that's what an exchange rate is. Now, the question arises, how do these exchange rates determine the value of different currency pairs? Well, the value of a currency pair is intrinsically tied to its demand and supply. So if we look at Euro USD, for example, right? As you can see, the euro is going up, right? It's rising in value. It's going up, right? It means that there is demand for the euro. This simply means that more people are buying euro and they are selling the dollar, which makes the euro rise in value. Now, a currency pair appreciates when its demand exceeds its supply, right? Making it more valuable compared to others. Conversely, if supply surges or it goes down, the demand falters, the currency value will dip, right? This tangle of demand and supply is what often propels exchange rates to sway and different currencies to rise and fall. So to conclude the first part of this video, right, we've touched the tip of the iceberg that is forex trading, right? We've embraced the concept of trading currencies on a global canvas, learned to speak the language of currency pairs, and glimpsed into the influential realm of exchange rates. I need you guys to remember this, right? Forex trading isn't just about numbers. It's about understanding the intricate connections between economics, politics, and global dynamics that shape the movement of currencies.